So why real estate and why now? I wanted to read you a quote by Warren Buffett. For those of you who don't know who he is, Warren Buffett is the world's second richest man and probably the world's greatest investor. Here's what he had to say about bad news. The financial world is a mess, both in the United States and abroad. Its problems, moreover, have been leaking into the general economy, and the leaks are now turning into a gusher. In the near term, unemployment will rise, business activity will falter, and the headlines will continue to be scary. Bad news is an investor's best friend. It lets you buy a slice of America's future at a marked down price. That's Warren Buffett. So that's what his take is on bad news. So, Chris, I know you're up on current events and you like to, you're piped in with a lot of news online agencies. What types of things are you reading about in the news, economics-wise?
I think the main 2 points that everyone's touching on right now is the continued loss of jobs and increasing unemployment, and then also that home foreclosures are still increasing even above last year, which was a big year to start with.
Right. We're also reading about things like the retail industry in a decline right now, where you've got large institutions like Circuit City and Gottschalk's who have both filed bankruptcy and are now out of business. Right?
Amazing.
And like you mentioned, unemployment rate here in Sacramento, it's 12% plus. That's also the case statewide, 12% plus. Down south in San Joaquin County, unemployment is 15-16%. Nationwide, it's still at double digits, and just about everyone that we're following and the projections that we're reading about are predicting that it probably gets worse before it gets better.
At least flat.
Absolutely. We're also reading about our city, county, state, and even our federal governments awash in red ink. Right? I don't know if you saw what the latest projection is for the state of California, but this fiscal year, the state of California is projecting a $20 billion deficit this fiscal year. So that has some repercussions here. It kind of like ripples throughout the economy. Right? So those are the types of things we're reading about. So what does all this mean? And what basically to the world's greatest investors, like a Warren Buffett, like a Donald Trump, like a Sam Zell. You know who that is? Yeah. Sam Zell, for those of you who don't know, is also known as the grave dancer. He's probably the most prolific contrarian real estate investor of our day, right? So to investors like this, whenever they hear this kind of bad news, the more bad news, the better, right? So, in fact, many believe, just like we do, because of this perfect financial storm that we're in right now, what we really have in front of us is the greatest buying opportunity probably any of us will see in our lifetimes. Would you agree?
Yeah, I think so.
Yeah. So that's what's going on, news-wise, economics-wise, business-wise. What does smart money usually do in times like this?
I think one of the biggest things that they look to do is buy value in distressed assets and then also create cash flow. So you're looking at stocks, equities, real estate, and even some businesses.
Snapping up undervalued, devalued assets. Jumping in there, being as aggressive as ever, and just snapping up assets.
Yeah.
That makes sense.
But I think cash flow is big too.
Cash flow is the key.
Because it allows you to hold it long term for the turnaround.
Absolutely. I mean, and that's what we counsel and recommend as well in the arena of real estate. If there's no cash flow, you shouldn't
buy it.
You shouldn't even be considering it. Cash flow today is the name of the game. So, but anyway, so what does smart money do? Let me just give you an example. Warren Buffett, since we're talking about Mr. Buffett, not long ago, Wall Street had one of its most tumultuous weeks, where the Dow probably had one of its steepest declines in its history. So what do you think Warren Buffett does in times like this? Well, during that very same week, he's being as aggressive as ever, and during that same week, he invests $5 billion in Goldman Sachs and $3 billion in General Electric in that very same week. A lot of people thought he was crazy. What do you think? Was he crazy?
No, he was great. He was really smart. Because he locked in 10% on his cash flow,
right,
and then the ability to profit big time on the upside as well.
Absolutely. So he walked in with a profit. And I don't know if you guys realize this as well, but Goldman Sachs just reported their highest quarterly net profit in their history.
It paid off real well.
Paid off very well. It's paying off very well. He's the type, his investment strategy is buy.
Yeah.
And he hangs on basically forever, right? So anyway, so that's what I mean. So that's what happened to Warren Buffett. So does he look crazy now?
No.
Crazy like a fox, right?